Good afternoon, my name's Ryan Littlestone from forexflow.live. We're going to have a little bit of a catch up in the market moves that happened last week after the Fed FOMC. The market was pretty much got what it was asking for. It'd been leaning towards the easing side and looking for rate cuts. And the Fed pretty much confirmed that they were a little less than neutral now. They hadn't pointed out any particular date or indicated any particular time they were going to look to cut. But they had said that they are continuing to be data dependent. They're going to be looking at the consumer, at inflation, at wages. And so the market pretty much sold off dollar-wise on that. A pair we were looking at, euro dollar, that's risen back up. You know, we were knocking around the low 111s, mid 111s, and we're all the way up today to testing 114. On the chart itself, we're pretty much sitting in the same sort of range that we've been in for quite a few months now. We were looking mainly here at Forex Flow at the sort of 112, 115 range. And we've moved off the bottom of that, pretty much the bottom end of that 112 range is, I've lowered it down towards about the 111 area now, because that's where we saw it bounce before a week or so ago. So that's pretty much set the range at 111 to 115, so we're not arguing over too much. So here we are up at 114 at the moment and seeing if we're going to break that. If we do, then we're going to have a test of this big 115 area. And it's been an area that's gone all the way back through 2018. So it's a pretty solid level. We have seen the odd break above, but it hasn't lasted. So it's pretty similar moves to what we've seen down at the 112 area where we've come underneath, stayed down for a little bit, but it doesn't take long and we're back up. So when we take everything into consideration, what's happening with the Fed, and also now factoring in what potentially might be happening with the ECB, because they're now, sounding out rate cuts and prompting all their tools in their toolbox. We've potentially got a bit of a two-way trade here where euro dollar's rising on the back of dollar weakness. But if the Fed don't cut in July, that could shock the market a bit. I don't believe they're going to cut in July unless we see the data collapse. So what we could see is the market getting a bit of a jolt in July at the FOMC. And then if we're going to see the ECB really maintain this easy bias and talking dovish, then the market's going to switch straight into selling the euro dollar. And so we could see that come all the way down. So from a trading standpoint, I'm pretty much sticking to what I've done for the last few months, which is, drop the levels in between, but lean against these wider levels, lean against the low end and lean up against this 115 area. And if it breaks, it's potentially a break you can go with. We did that here quite some time ago when the last time it broke 115. The price action was looking very strong, so some of us were shorting into the 115 area, but also sticking in buy stops just above so that we could reverse into a long if it did break. And that's what happened, and we caught the break above. So that's really the way to play these big levels. You can go against it with shorts at this 115 area, but perhaps look to switch it around on your stop into a long if it breaks and then run it up. And obviously if it comes back below the 115 area and holds below, then you're wrong, and then the level firms up again and you look again for shorts. So pretty much like most central banks, we're all sitting here data dependent. As I say, the big points for the Fed at least are going to be inflation. So we've got the PCE report coming up next. The jobs report is going to come right in amongst the holiday weekend where we have the Independence Day on July the 4th. We get the jobs report on July the 5th. That could be a bit volatile because a lot of the market might be off in the US, taking an extended break. And then the rest of the consumer data like retail sales, consumer confidence and some of the minor surveys like that, they're all going to be an indication going into the July FOMC, and that will give the market the clue as to whether it's going to cut or not. So lots to play for, and stay safe when you're trading out there, and good luck.